What's up, folks? I hope you're all having another blessed weekend today. You know, I caught a cold. The young one brought that home with her. So I'm kind of under the weather right now, but I'm going to power on through just for you folks and try to keep the energy level up and the sniffling down. Now, today we're going to talk about silver and all the shenanigans and how I think it's actually a great investment opportunity. Again, I don't give investment advice to anybody on this channel. This is just what I'm doing. So in my eyes, it's a great investment opportunity for me. And you know, over a year ago, I released this video about how gold was a great investment opportunity for me. And that has done really well since I posted that video up. And in fact, it was, given how gold keeps hitting new all-time highs, a great investment opportunity in the past 50 years. And I will discuss what I think about silver in the same vein in today's episode. But before we do that, let's take a look at what I said last week and what I thought was going to happen during the week before we move on. So let's see how this plays out. But, you know, going into next week, I do think we are going to just keep drifting higher. We'll probably have some kind of a correction to start the week off, I think. And that's going to be followed by some up and down movement as more distribution occurs before this finally occurs. And that's kind of what happened again, right? We did have a little bit of a drawdown on Monday, and then we just basically went up and down, up and down, up and down, and went nowhere for the entire week. In fact, if you look at the price action last week, it was basically the most boring week I've seen in a long time. We basically, like I said, we kind of just drifted up. And, you know, distribution up and down, going nowhere for the entire week. It was a complete snore fest. And, you know, some of the people I saw in the comments were asking for a midweek episode, but I got to keep it real. If I have nothing to really add, and I'm not going to make episodes for the sake of making episodes and getting view time, I'm not going to make one. And last week was really, there was just nothing going on, nothing to add. But if you take a little bit of a closer look under the hood, you'll see what has been going on last week was we'd have these big CTA driven or algo driven sell-offs, after which the dip buyers would come and slowly bring it up, and then you would have another big hammer down sell-off, and that basically was the price action all of last week. And this just reinforces the distribution setup that I think we're going through at the moment, and that base case has not changed for me. Now, I posted this way back in November 23 already, so it's been a few weeks now, where I said what might happen is that we're in the middle of a Wyckoff distribution, which I called out in Feb earlier this year, that led to the Liberation Day crash, and now I'm calling out again here. And I said all the way back then that, you know, we're probably going to go up. Back then, we had actually made a bottom over here. We hadn't made that huge Thanksgiving rally a couple of weeks ago. And I said that we might go up and do some distribution here before we go back down. Well, lo and behold, that's pretty much what happened, right? We made this pretty big move up over Thanksgiving weekend. The dotted lines did end up happening. And then we're just doing this kind of up and down distribution at these price levels here before we enter the final drawdown in the LPSY mode. Now, can we eke out a new high, and maybe this wasn't the UTAD, but we're going to make a UTAD here? Quite possibly. But the whole point here is this is not, if it's going to be a new all-time high, it's going to be a fake out and drop back down if we make a new one. We may not even make one and just continue to do this up and down movement at these price levels. Now, what would invalidate this would be a clear breakout over the rectangle, okay, over 1%, and it stays above it. Either back test and stays above it, or it just keeps going. That would invalidate this Wyckoff distribution. That's not my base case. I don't think that's what's going to unfold. My base case continues to, you know, hold, because we basically are doing what I thought we would do, which is we're going to do a rebound into Thanksgiving, go up and go back down. And that's exactly what's been going on. So really not much more to update there in terms of the overall equity and stock market and the direction I think it's going to be going. It's just essentially following the plan I laid out many weeks ago, and I've been trading around it quite well. I do have to give a shout out to Mitchell over here. I mean, he shared on Discord that he is the top 0.1% of viewers. So my guy Mitchell, you the man. If you're watching this, thanks. I really appreciate the support. And I appreciate all of you guys watching here. You know, the whole point here, as you know, is to get out of simulation and to spread the knowledge and the wisdom out to as many people as I can. and have a place like the Discord server where the community can grow and foster. And so we're actually I'm gonna open up the Discord server again finally after shutting it down for a few weeks because it just grew too quick. I mean, we more than doubled the number of, we're at like almost 1,300 people. All of a sudden it just exploded up, and we just needed to make some changes to the server to make the flow of information go better, and also put security in place to protect everybody in the server. So that's been done, and we all kind of simmered in. So I'm going to open it up, but we're not going to open it up for forever and ever. What I've learned is, just open it up until like maybe the next couple hundred people join again, and then we'll kind of shut it down, let it simmer in, and do it that way. Because, I mean, the point is not to have like 100,000 person Discord server that has no value because it's just noise inside and people arguing with each other. And, what's the point? I'd rather have a smaller group of people who are highly engaged and who are very intelligent and provide all different kinds of info so that everybody in the community benefits from the discussion going on. And that's our goal, and we're doing well in that goal. And so if you want to, you can try and join the Discord server, the link's below, and try and join our community. So thanks, Mitchell. Big shout out to you, my man. All right, before we go into silver, I do want to do a final few slides on what's going on with the AI bubble. Now, there are a couple of things that came out that we need to just take a closer look at. The first one is that the NVIDIA CFO came out and said that the $100 billion OpenAI mega deal still isn't signed, and this has been 2 months. And if you recall, this deal really sparked a huge rally in the AI space. But the deal hasn't been signed, right? And so the question is, what's going to happen here? Why isn't it signed yet? And could it be that the banks who are supposed to foot the bill for the $100 billion are balking? And I think that is actually what's going on. There's news that came out that some of the big banks, one of which Morgan Stanley, came out and said that they're basically trying to offload their exposure to data center because of risk. They want to transfer that risk to other parts. And they use it through a pretty sophisticated thing called the SRT. But essentially, the bottom line and the message here is the banks who agreed and said they were on the hook to fund all of the circle jerk stuff are starting to balk at the amount of money and basically the math. And they're trying to figure out a way to offload the risk. Sounds familiar, right? Like 2007, 2008, just chop it up. Nobody knows what's in the sausage and sell the sausage. Kind of like what they're trying to do with new tools today, like SRT and so on. But essentially, it's a similar thought process. Chop it up, offload it into unsuspecting investors, and get out of it that way. And that's kind of what's happening with the loaners, the banks. And it's not a surprise because if you look at the debt, and I keep bringing this up, I'll continue to bring this up. For example, Oracle, who is the poster child of the crazy amount of debt they took on to try and fund all these crazy data center build-outs, it has skyrocketed and most likely will continue to skyrocket. So their credit default swaps for the company itself, their debt, is going up through the wazoo, which is basically saying that the debt markets don't believe that Oracle is going to be able to pay back all this debt. And that just is another nail in the coffin to the basically observation we're seeing where the lenders and the debt market are kind of starting to balk at the crazy amounts of loans and spend and operational expenditure that these AI companies are trying to shove down. The other thing that came out that was quite astonishing is that OpenAI, basically, this was released by who released this actually? Oh, geez, I didn't put the source in. Okay, it was sources from the companies themselves and as reported in the WSJ. Okay, but the bottom line here is OpenAI, okay, has to go and basically burn through $140 billion before $1 of profit is turned around. They're not going to be profitable until $150 billion, $140 billion is burned through, which is a crazy amount because if you recall, Amazon was, always in the red forever, right? 1994 to 2002. And look at that tiny amount. Spotify, remember Uber? They were subsidizing all the rides. I remember Uber in Singapore. It was so cheap. I was like, how are these guys making money? They weren't making money. That was this amount, but look at this. This is new uncharted territory. This much of burn before you see profit of $1 is just simply outrageous. But that's what's going on. And then if you look at what's happening in AI, the cost of using AI is just going down. Remember DeepSeek? That really cut down the cost by quite a lot. It just keeps going down. So the cost of that they can charge people are going down. How on earth are you going to... As I was saying on the Discord server, somebody needs to... and it keeps going down because of new technology. And I just don't understand the math here on how this is all going to really work out. So that means I do think the base plan still is intact. We are in the latter stages of a Wyckoff distribution, and that because of these fundamental problems I see in the AI debt market, the valuation, so on and so forth, everything I talked about in this episode and all the earlier ones, that we are going to have a stock market drawdown, along with the employment and all the other issues happening with the Japan 10-year yields going sky high and all that. But in that environment, could precious metals, why am I bullish precious? Wouldn't precious metals go down with the stock market? And it could, but not necessarily, or there's a time lag. See, what happens typically is that when the stock market, this was in 07 and 08, right? It started to roll over. During this rollover period, which can take many months, it took a whole year before because it was such a long run up. But during this rollover, as the stock market started going down, and as I show in this triangle, in this rectangle, precious metals such as gold went up initially. So we had this huge divergence happening until we had the panic sell-off. So here is when we had the panic sell-off, the margin calls came in, everybody had to liquidate all their winning assets, including gold, just to raise cash so they wouldn't get bankrupt. And that's what dragged gold down, along with the stock market. So this is panic mode. We're not there. I don't think we're going to start panic mode next week or in the coming weeks. That's coming, but it's not imminent right now. What's right now is this part, which is just a rollover before panic mode hits. And during the initial rollover, precious metals can do very well. And if you look, gold just ripped higher after that 20%. It was about a 20% correction back then. Just ripped higher while stocks kind of meandered until finally catching up. So I do think this dynamic has a high probability of playing out again. It is what tends to happen until the panic sell. And so that's why I do think I'm still bullish precious metals, particularly in silver. So let's talk about silver, okay? First thing I want to talk about is Mr. Slammy. Okay, if you know who Mr. Slammy is, then you know. Those who know. But Mr. Slammy is the representation of the shenanigans that go on in the silver market, because they slam, the reason why the name is Slammy is because they slam the stock market, the silver's futures market in particular, every day, or they try to do it and slam the price of silver down when it reaches some kind of a breakout at an important level, like $50, for example, historically important level. And so that's been going on. Now I want to show you, there is this chart that's been a study between, I believe, 2007 and 2013, where they actually looked at daily silver futures prices on a 5-minute chart. This is London time. And what is there a typical movement? And this was the typical movement. Basically, New York morning slam happens by Mr. Slammy. And then the rest of the day is some kind of like going up. And this pattern, and I ask, if you have time, go pull up a silver chart and look at the daily chart, and then tell me if you don't see this pattern. Because you will see it, not every single day, but you'll see it quite frequently, and definitely when we get near some important level, like $50 or $60 or something like that, you will see this pattern. In fact, just look at the last week of silver and tell me if you don't see this happening. I tell you, it's out there in plain sight. So Mr. Slammy comes along, usually in the New York session when New York opens, and they slam it down and they bring it back. So this is an interesting a study that was done over many years to see what the price action is on the daily at the 5-minute time frame, and you see Mr. Slammy coming in here with the afternoon recovery. And gold is a much bigger market. Silver is like 1/10 the size, I believe, of gold, so it's a lot easier for them to manipulate the price of gold. And they want to keep the price of gold down because of many reasons, which I'll talk about. But one of the things to keep in mind, okay, is paper gold. Now this number, 378 to 1, I've seen anything from 250 to 400, okay? But basically there's a whole lot of paper to the actual physical amount of gold in the vaults around the world. And you can imagine, right, what would happen if it's an inverted pyramid. There's a little bit of something and you just keep derivatizing the thing up, and then you have this huge thing at the base of the inverted pyramid. That's what's going on. So if a little something at the bottom of the pyramid, right, a little something moves, the impact goes up to, right, the paper, and that paper amount is huge compared to the little thing that happened underneath, just because of the way an inverted pyramid works. And that is the setup of silver. It's this astonishing tiny sliver amount of physical silver that there's so much paper in futures and ETFs and so on and so forth representing it, that a tiny movement here, wow, there's going to be a big change. And that's essentially what we're seeing, because what's happening is that the shenanigans are ending. Now, I'm going to go through just a couple of slides briefly here, but silver has notoriously been known to be manipulated, and many banks have been caught red-handed and fined, and people have been jailed because of the manipulation of silver. They try to keep this thing down over and over for many decades now. And I'm just going to show you a small sliver of the silver manipulation that has made the news. So the CFTC, or the Commodity Futures Trading Commission, they oversee the COMEX, where silver futures are traded and the vaults are and all that. And you don't have to go too far back, but let's say in 2021, they came out the acting chairman came out and basically said, look, we know there's stuff going on. This is actually how the Slammy Man started. But he said, we know what's going on, and we're closely watching, okay, all the shenanigans that you're doing. That was a statement that was made. Then more recently, in May in 2024, JP Morgan was ordered to pay $100 million over trade reporting violations. Okay, so they're again fudging the numbers of the trades they made. Guess why? They were forced to pay. Now, $100 million is a drop in the water for JP Morgan. But the point is, they got caught and they had to pay a fine. And then you go back into May 2024, they had to pay $200 million for supervision failures. Okay, so they failed to surveil. Okay, basically, they turned a blind eye is what they did to client orders in the contract market in the commodities exchange. And that was $200 million. It's also a little drop in the bucket for them. And then in 2023, a bunch of them got caught. Because they weren't reporting their swaps in the commodities. So Goldman Sachs was in it, JP Morgan, Bank of America. They got caught and they were fined. Then there was a big one where JP Morgan had to pay almost $1 billion for manipulating gold and silver markets, particularly. This was back in 2020. And now there's banks currently under investigation. Again, JP Morgan, and then there's Deutsche Bank facing ongoing litigation. UBS has also been implicated. HSBC is currently under investigation. I think you get the drift here. It's the factual data shows that many of these banks have been playing, and this is what they caught. So you understand that there's a lot more going on that didn't get caught. And this paints a picture of the very manipulated commodities, particularly silver market, because of its small size and importance to the global market, because silver is an actual commodity that's used a lot in many of the processing of manufacturing of all kinds of products and services. So that brings me to the episode last week that I talked about, which was when the CME halted, right? All trading, for all futures trading, due to a cooling issue at the data center. That happened the last week, and that raised a lot of eyebrows, including mine. And I'm going to just not go through all of the details I described in the earlier video, but basically it was very suspect, especially because of my experience in data centers, that a N+2 cooling setup where you have the main cooling system, then the backup system, then the backup to the backup system, and then a separate geographic site failover all failed in sequence for them to shut the futures trade. I mean, that's just very hard for me to believe. But that happened last week, just as silver was about to break out. And so that gave at least a lot of fuel to all the tinfoil hat people. Now, what I want to show you here is the secured overnight financing, rate here. The volume is, interestingly, it kind of follows silver, where silver, whenever it goes up, you'll see that, when they take it down, there's a corresponding, it's not a really high correlation, but you can see that when they try taking it to SOFR, it goes down. So it seems like they're using the secure overnight financing to do Mr. Slammy Hammy. And so maybe that's where they get their funding from. I don't know, but that's an interesting thing that I saw, and I just wanted to mention to you. Now, there's a lot of rumors going around online, and there was one that was saying there's 7,330 contracts that caused this, they wanted it to get delivered, so that's why the COMEX was shut down, because they were faced with an imminent default. And so what they did was they shut the COMEX down. They got the guys together to, off the exchange, off record, negotiate a deal, and they came up with a premium of $1.77 above spot to pay back the request in fiat instead of in delivery of the actual silver, and do a cash settlement to get that, to basically delay and get that request out of the books. And then when they basically agreed to this handshake that's off the books and not on record, that's when they brought the COMEX system back online. Now, this could have happened, and there is some data showing, yes, there was 7,300 plus contracts and all that. So we don't really technically know, but I do also want to provide a very, the other side of the equation, which is also very factual. And so you can't just believe anything you see online. Because if you look at it, 7,000 seems like a lot, but the history of delivery requests is, look at May. It was 13,000, almost twice the amount. December, 9,000. Now, if you look at this data, you'll see that 7,000 is not going to default the COMEX. We've had bigger, and this is not abnormal in terms of volume. So keep that in mind when you see stuff. You just got to balance it out with if you go into these social media places on Reddit or X or whatever, you might get thrown off with some sensationalized truth that is then morphed into something that it's not, right? The half-truth thing. So just keep that in mind. Now, having said that, I've shown you all the shenanigans in the past that the banks got busted at by the CFTC, right? So could there have been some shenanigan going? Absolutely, right? Is it exactly what they're saying? Who knows? Because it's off the record. So there's no way for us to really know. The only time we'll know is when they get busted later by the CFTC again, if they get busted, and then they either get, pay a fine / somebody has to go to jail. That's when we'll know for a fact. But until then, it's all hearsay, she say, and we're just kind of operating on speculation. So I wouldn't get too hung up on the speculation part of things, but just know that the backdrop and the historical precedents kind of make it seem like there could have been something going on that would explain the timing and also the price action that we see on silver. There's other things going on that we just got to keep in mind because, like I said, there's three main exchanges. There's the one in New York, COMEX, there's the London, LBMA, and then there's one in Shanghai in China. Those three kind of help set the trade and physical metal and pricing around the world. But London was the one they've been emptying their vaults for the past, and it really accelerated. It really accelerated to the point where they were actually flying silver to London because there was not enough silver in the vaults of London. And silver, as you know, is not as valuable as gold, so you don't typically put silver on an airplane and fly it over. You put it on ships because it takes a lot more silver for the same worth as a bar of gold. But they got so desperate they actually loaded up an airplane and flew it to London because there was not enough silver in the vaults in London. And that caused the squeeze and backwardation. And that's a constantly ongoing thing that is happening and contributing to the rise in the price of silver. Then we have the political and geopolitical shenanigans, or I wouldn't call it shenanigans, but ratcheting up of policy that's been going on. So recently, the United States added copper and silver in the list of critical minerals. And this list came out after that whole China thing with the rare earths, and the US kind of got caught, right? They got caught. They didn't have an answer to the rare earth thing that China pulled out with that trump card. So they came up with a list of critical earth metals in which they put silver in as something they want to control and monitor. So you can see it getting ratcheted up. Meanwhile, China comes out and also says, we're going to include silver. Okay, you're going to read this Chinese, but just trust me when I tell you, silver was included here into the new rules where China has to approve, okay, whether or not the export of that metal, in this case silver, is allowed to whatever country for whatever reason. So you see both countries ratcheting up the control of silver. So there's a lot of backdrop going on here. Now I wanted to share this post that Robert made. Now Robert used to be the head of precious metals at JP Morgan. He's moved on. He's not that anymore, but he used to be. And he didn't go to jail, so he's not one of those guys. But he posted this on LinkedIn, and I guess LinkedIn has some content here and there that's worth reading. But he was basically, the TLDR of this is that because of the geopolitical instability where tariffs and trade things can happen, we have this structural tightness in the arbitrage markets of silver where it's just going to be a buffet and a support system to more and more bullishness for silver. And he goes through an example here basically saying, if in CME, in America, the trade at 60-cent contango, but the 3-month silver bid in London is, the OTC is at negative 3.5, he's saying that there's a lease rate of 7.3, which is quite high. And that would seem like, hey, why wouldn't you do arbitrage in that? And he breaks it down into, well, you could, but basically, if there's some kind of a tariff, it would kill your arb trade and you would basically get wiped out. And so for that reason, we have this tightness in silver and essentially a bottoming buffet of forces that want to make silver go higher because of that reason. So as you can see, there's a bunch of things going on. There's not enough physical silver going around given the amount of paper there is. The vaults are being emptied and shifted around because of all the demand. People are now, they don't want that paper anymore because it's funny money. They want the actual metal now. So they're playing games trying to, I take delivery. Maybe that shut the comics down and they gave the excuse of overheating. But there's all this stuff. And then you throw in on top of the geopolitics and tariff and trade wars that could just, kill any arb trade. And you see what I'm saying? There's all this fundamental reasons to why the silver trade, in my opinion, and at least for me, I'm investing in it, is a very, very good long trade in the next year or so. Just like I said that the gold trade over a year ago was going to be a historically great trade, the same thing now applies for for silver. And that's because, like I've been always saying, stage 2 of the secular precious metals bull market is when silver takes over from gold and starts outperforming gold in the run-up to stage 3, which is a miners, which is not yet here. The other thing going on that caused quite a stir is that JP Morgan moved its trading desk to Singapore, where I am. And I was joking on the Discord server. I was like, hey, I told those guys over the desk, you can either come with me to Singapore, this was years ago, obviously, or get forced to go to Singapore later. Well, here they are. They're forced to come here. And to be fair, part of the reason of moving to Singapore was because of this, what I'm doing here, to be able to trade silver and gold bullion without getting any capital gains tax. Also to trade stocks and other investment instruments without having to pay capital gains tax, because there is no capital gains tax here. In Singapore, it's also very safe. You can walk around here. There's no security guards in front of the gold and silver bullion dealers. And it's at the central hub of Asia. So if you ask me, why did JP Morgan move its trading desk here? Some people saying, oh, they want to escape some, legal issue, or they didn't want to get in trouble. No, you don't come to Singapore to escape. Singapore is super rigid and that's the benefit of it. It's very secure. Everybody follows the law here. Any shenanigan, you're going straight to court instantly, much more than America. So no, that's not why they're coming to Singapore, is to avoid the law. There's two reasons. One, the biggest reason is the metals are going. There's this inertia move to Asia for gold, silver, the precious metals. That is one of the underlying currents happening. One of the reasons why I moved here, and what is going on. You could see it with the way gold and silver is being traded, the physical gold and silver being traded, and how in Asia silver price is always a little higher than in the West, right? And that's the arbitrage that they're trying to struggle with. That's the main reason. And why move to Singapore? Well, it's the hub here, and the time, if you ask me, is the reason. Meaning, if you're in New York, it's a 12-hour difference. You're watching and seeing what's happening in Asia, right? And you figure out what to do when New York opens in the morning and do slammy hammy, man. It's tiring. You're going to be up 24/7. A lot easier if you have the time zone of Asia, which you get by moving to Singapore, which I believe is the real reason why they moved here, because the action is now in Asia. You got to follow the time of Asia, the time zone of Asia, so you can do what you need to do, and that's why they moved. That is my reasoning, not all the other speculative stuff that you might heard. It's straight up time zone. Okay, moving along. Yes, there's a lot. And so this is in Clarke Quay in Bullion Star, and one of the dealers here in Singapore. And there was a line formed before they opened, and this line was not to buy gold, was to buy silver, because silver has been going up and has been a great asset to invest in. And if you look at it now, I've been saying, look, we got this cup and handle. We got this cup and handle. If we go above this cup and handle, going all the way to 1975, okay, that's 50 years, 50-year cup and handle. We're going to go up. I've been saying this. I've been saying it. Well, it finally happened. The handle was broken and we shot up. And boy, did we shoot up. We shot up. Now silver is the highest performing asset among the metals, 70% plus. Overtook gold, which was previously number one, at over 54% for the year. Now this year, it's silver. And just like that, overtook it. And I rode this. Oh boy, did I ride that up. It's been great. So that happened. But if you zoom in, okay, you'll zoom in here. You'll see that there is another cup and handle. It's like cup and handle within a cup and handle, because this is the chart on a daily time frame, and we had this cup and handle, and again, once we broke this cup, we went up, and I rode that up. So I was able to ride this up. As you know, if you're in Discord, I avoided that whole thing, and I rode this up, I avoided this up, and I rode this. So make the money, protect your gains, make the money, protect your gains, make the money, protect your gains. Exactly what I've been doing. And I actually document all that I'm doing on Discord, and they're all timestamped, so there's no funny business of changing things around. It's exactly what's happening, exactly what I'm telling people, how I see it, and exactly how it's actually been played out. So if you look at silver now, zooming in further on the 2-hour chart, what's going on right now is it looks like we're just consolidating this big move up here, and it could be that this is just a consolidation before the next level up, which could go above 62 to 64. So that's what I'm watching carefully. I've been avoiding even these small drawdowns, as the people on the server know. But could we go down here? Anything is possible, but that's not my base case. My base case is that maybe we did put in some kind of a flag here, a bull flag. We're just digesting this big move up before we launch up into the next move up around the 60-64 range. So that's what I'm watching. That's what I'm positioned for. And hopefully that is what's going to unfold and yield even more returns for me. And here's one thing I want to show you. The price movement, which is in red in silver here, is occurring with not a big spike in open interest. If you look at this huge move here, you'll see the open interest actually not being that much. So that tells you that these crazy moves up, near vertical moves up, they're not driven by FOMO investors, YOLOing into silver. It's not the degen, no. It's short covering. Because the open interest is not going up. But why is this price exploding? It's the short covering. The shorts, anybody who's playing the shenanigans, those banks or whatever, being forced to short because Slammy couldn't slam it forever and the underlying fundamentals are popping it like a beach ball underneath water. You can't keep the beach ball underneath the water. It keeps like popping back up to the surface of the water. That's kind of what's happening because of the fundamentals that I explained to you that are going on with silver. And Slammy Hammy, man, can't keep it underwater. So what happens is whenever it pops back up, you get this short covering, vertical spike up that's driving the prices of silver up. And you can see it, right? You can see it. I'm showing it to you right here. That's what's happening. That's what most recently happened. And that's what I expect to continue to happen and why I continue to invest in silver actually more than gold, because if we did actually enter stage 2, that would mean silver is just going to outperform gold. So that's, in as far as the investment return setup, I'm going to be playing silver. And then eventually I'll be playing the miners once stage 3 comes in. So having said that, let's see what the next week brings. Now, as I said earlier, I do think we are still in the latter stages of the Wyckoff distribution. And so if that is the case, I expect perhaps a little bit more distribution, maybe a little pop down and pop back up and distribute, but it will end and we will have the broad market sell-off when the distribution ends. So now we're approaching the end of the year. In fact, we're now in the Santa Claus rally period. It's actually starting last Wednesday, officially, when Santa Claus rally period begins, which means the stocks just kind of rally into the new year. So that kind of doesn't fit in with the Wyckoff distribution if we do have the drawdown happening in the next couple of weeks. So that's what I'm watching very carefully. Do we get this drawdown once they finally finish the distribution, which I believe they will, and catch everybody off guard, everybody who's saying that we're going to have the Santa Claus rally, Santa Claus coming to down, yet we do have this drawdown that will just spook everybody. And don't forget, next week we're going to have the Fed lower, it's pretty much guaranteed, the interest rates by 25 basis points, over 90% chance according to the betting markets that the Fed's going to lower the rate by 25 basis points. So that's a done deal. The question is not about whether or not going to lower it by 25 basis points. This is going to be a hawkish cut or a dovish cut. And what that means is after the news comes out, when Jerome Powell speaks, what is he going to say? And I do think that it's going to be a hawkish cut. There's no question they need to cut. The economy is tanking. Jobs are being lost. Consumer is on life support with credit. They're buying buy now, pay later programs for Black Friday. There's no question they need to cut. But the problem they have is because of the government shutdown, they don't have as much data as they normally would have. And I have a suspicion they're going to talk about that they're flying a little bit blind, that they don't have as much granular and as much data and they're very data dependent on their actions and they don't have as much data. So that is going to probably be part of the language when they come out on, I believe, Wednesday. And that is going to translate to many people as a hawkish cut. And perhaps that is what's going to trigger the sell-off and cancel the Santa Claus rally. So I kind of think that's what's going to happen. I kind of think we meander around until the Fed speaks, and then it's going to be a cut, but it's going to be kind of like a hawkish cut, and that's going to torpedo the markets. And the question there I have is, when that happens, is silver and gold going to continue to go up, or will it tank with the markets? And that, I don't think precious metals will tank, right? I think it'll get a dip, but it'll be bought up and go up. Like I showed you, there's that divergence where precious metals can go up as the stock market's rounding top pattern evolves. As the last time it happened was 0708, as I showed you in the chart earlier. So that's kind of my base case. Again, nothing set in stone. I'm going to trade around it. If things change, I'm going to adjust my base case for the week, and I'll tell you about what happens maybe in an interweek episode if something changes drastically. But so far, that's it. Let's see what happens, and I'll see you in the next episode. Peace out.